Celsius just reported their latest quarterly numbers, and to be honest, not a good quarter, a double miss. Stock is currently down 6.3%. Now, as we go over this report, it's important to note that last year the company had a huge tailwind thanks to Pepsi. This year, that's not the case because they got quite a lot of revenue from Pepsi last year, and that's why these quarters year-over-year comparisons are quite difficult. They recognize that revenue when they get the money from Pepsi, not when you buy a can of Celsius at 7-Eleven, for example. So when you're not getting that huge boost from Celsius right now in these quarters, and you have to compare this quarter to the same quarter last year, makes sense, then the year-over-year comparisons are getting quite difficult, especially in the United States, North America. Now, for international, that's the positive side of things. International is still growing and doing quite well. But overall, yes, a weak quarter. Stock is down 6.3%. Currently, the average analyst price target sits at $45, which means 40% higher or 45% higher than the price we're at today. And so before continuing, jumping into this, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So here, as always, Brad, Stock Market Nerd on X, provides a great review summary of, this report. So they missed on the revenue estimate by 0.7%, missed GAAP gross margin estimate by 60 basis points, missed EBITDA estimate by $6.2 million, and missed GAAP EPS by 3 cents. So here you can see the quarter-over-quarter growth or decline, year-over-year growth or decline, and then the 2-year CAGR as well. So quarter-over-quarter down, year-over-year down as well. Internationally is of course better. It's up 36.7% year-over-year. Now, I do want to show you one thing is that, the energy sector compared to the beverage one is up. The beverage one is down actually 3% in 2024, yet energy is up 1%. Management told us the following things. So first, the CEO, Celsius continued to drive energy drink category growth at retail in the third quarter and outpaced the category in dollar and volume sales gains despite overall category softness. Pronounced supply chain optimization by our largest distributor, which we believe has largely stabilized, had an outside and adverse impact on our operating results during an otherwise solid quarter. We remain focused on our long-term growth strategy of expanding our consumer base, broadening our availability, and being the preferred beverage for more occasions. As for the CFO, gross and operating margins in the third quarter fell short due to significantly reduced orders because our largest distributor implemented a sizable, successful, and efficient supply chain optimization program in the quarter. But we managed our sales and marketing spend to minimize interruptions while still turning a profit in the quarter. That's also thanks to the interest on cash. This activity did not impact customer sales at the retail level, which remained healthy. Our strong balance sheet enabled us to acquire a long-time Celsius co-packer, Big Beverages, which we believe will unlock innovation and other supply chain efficiencies. Now, Pepsi, a couple of weeks ago, did talk about Celsius and the energy sector on their earnings call. So they say here, on the short term and how different segments of the category plays out, talking about the energy category, I think the energy category in the United States has clearly been impacted by the traffic in convenience stores. And traffic in convenience stores has gone down, it's been going down, and I think it's part of the economic cycle that we're in, and that will reverse itself in the future while consumers feel better. So I wouldn't overplay the long term of the energy category. With regards to Celsius, I'll say the same as I said in the past, we like the partnership. We are delivering on our part of the partnership. Our distribution points are going up, our service levels are going up, so we're executing our part of the partnership with discipline and high standards, and we remain optimistic on the partnership. So overall, quite positive. Now, as for Celsius in the category of energy drinks, they contributed 16% of all energy drink category growth year over year in Q3. They're the number 3 total share of US energy drink category in track channel at 11.6%. They also added 6 new countries in 2024, which we're definitely going to see the great impact of that in 2025. But like I keep repeating, just because you launch in new countries does not mean that you're going to be successful. So overall, revenue came in at $265.7 million. That's down 31% year over year. Q3 last year was the second best quarter for the company ever. So quite difficult comps here. Overall, year-to-date, revenue is still up 5%. As for North America, that's down 33% year-over-year. Of course, we know why. Internationally is up 37% year-over-year for this quarter. Year-to-date, it's up 36%, which means that this quarter actually grows faster than the year. Gross margin is down 440 basis points. They explained why. Net income is down 92%. Net income is down 92%, and diluted EPS is down 100%, basically break even for the quarter, and adjusted EBITDA is now down 96% to $4.4 million for the quarter. And here you can basically see Q3 2023, right? Second best quarter for Celsius. In that quarter, you can see the huge increase here, 104.4% increase year over year. Again, thanks to Pepsi. Thanks to Pepsi back then. Now it's because of Pepsi that we are in this type of situation. But over the long run, I still believe that this partnership is going to be a big tailwind for the company. As they said, with regards to retail sales, they are still doing exceptionally well. Year-to-date share, 12.1%. If you look at year-to-date dollar change versus the year ago, they're doing very, very well compared to all the rest. Red Bull is increasing and is improving actually from last quarter. Now, I would like to say that yes, right now you can see here their share sits at 11.8, which is down from 12.3 in Q2. Red Bull did increase by 0.1 and Monster continues to go down. They did also make a small acquisition, one that will cost them $75 million paid in cash. So they purchased longtime co-packer Big Beverages Contract Manufacturing a couple of days ago. They say here the following: the strategic rationale behind this deal is one, vertical integration of a plant primarily dedicated to Celsius provides incremental R&D and limited time offer product opportunities, as well as turnkey facility. There are future expansions opportunities with ability to add additional capacity as the business scales and grows. Per case savings and improved leverage and margins are expected. Solid return on invested capital opportunity, and they believe this is an earnings per share accretion potential. Now, if it successfully works out, remains to be seen, but they use their cash quite good. $75 million makes sense. Being vertically integrated here could help margins in the future for sure. And so looking at the chart right now, from the peak back in March all the way to the price we're at right now, pre-market, we will be down basically 70%. And now we're reaching this type of bottom that we've seen before back here in October 2022, March 2023, just under $30 or so, or around those areas. RSI is going to be very close to being oversold, if not oversold during the day. On the weekly, remains to be seen what the market really thinks of it. Are we going to go lower, or does the market think that maybe it's gone down enough, maybe it's now back to reality, and exiting 2025, going to 2025, we think $30 could be a good value for this company. So what do you think? Does it go lower? Are you buying? Are you selling? Just holding, looking for the next couple of quarters, seeing if we see some reacceleration in growth now that, the supply chain issues are mostly resolved? Let me know down in the comment section below. I still remain bullish on the company, so let me know what you think. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.